Hi, I'm Shailesh and I will be taking you through the purchase process today. Purchase process basically consists of the process which starts with orders and ends with the payments made to the supplier. Before we go through this entire session, let's quickly recap whatever we have done in the previous session. In the previous session, we have covered certain modules like making basic accounting transactions which are available in Tally.ERP 9. These vouchers such as payment, receipt, contra and journal were covered. Now let us come back to our topic, that is purchase process. The topics that I will be covering today are in front of you. We'll start with creating the purchase order, booking receipt notes, raising the rejection out, making purchase voucher, debit notes, raising payments, discussion about what are voucher types and how voucher classes can be used. Then we'll also go through the process of pre-closing the orders. Before we start, let us first understand what is the importance of purchase. Purchase process is an indispensable part of any business. When the purchase flow is smooth, it will ensure that all your sales orders are serviced on time. The screen that is in front of you explains the basic purchase model. A basic purchase model starts with a purchase order, then we receive the goods, and finally a payment to the supplier is made. Let us map it with the daily purchases that we do. You would be going to a retailer shop, buying some material, taking that along with you to the cash counter and making the payment. That itself is a purchase process. What would you be doing with those material? You would be consuming it. Now when you map it with the business, what does the business do? It calls up its supplier, places an order, then the supplier supplies those material to us, and for the material that we have received, against that we make the payment. However, there is another model which says in any purchase flow or during the purchase process, if at any time I find that the goods which are supplied to me are not in line with whatever terms I had agreed with my supplier, I have full rights to reject them and send it back to them. The third model is an advanced model where a third model is an advanced model where a business places a purchase order with its supplier, the supplier sends the goods and I receive the material. In case the material is not in line with whatever I had agreed with, I will reject those goods and send it back. Based on whatever I have received and sent back, the supplier will send me the invoice. I will record it as a purchase. In case after receiving the purchase, if there are certain material which I want to send it back, because once it was sold to my customer, the customer has come back and returned those material which I need to send it back to supplier because they are damaged. In that case, I would raise a debit note. And then once the debit note has been accepted, whatever balance is left as an outstanding, I will pay it to my supplier. This is an advanced purchase model. Let us take a scenario and discuss it. Like, I am ABC and Company and I am into business of garment sales. I sell t-shirts and trousers. To cater to one of the customer's requirements, I placed an order of 500 t-shirts with XYZ Creations. XYZ Creations then supplied 400 t-shirts to me, of which I found that the 50 are defective and hence I wanted to return it. XYZ Creations charges me freight at 10% of my transaction value, and when he bills me, he provides me 1 month's credit period. During this course of 1 month, I as ABC company make payment to my supplier. Right? Now there is one more scenario that we have, that is ABC and company is yet to pay for a previous purchase that he had made from XYZ Creations. Let us play this scenario with Tally.ERP 9 with us. So let us see how the purchase process is recorded in Tally from order to payment. Purchase order. First of all, let us understand what is a purchase order. Purchase order is a document which is sent to a supplier or a vendor authorizing delivery of certain products which I as a customer require. In the purchase order, there are certain terms which we will agree upon as a party and as a supplier, and there will be certain price to which there will be an agreement. So in our scenario, we have discussed that we are going to place an order of 500 t-shirts. So let us see in Tally how this is achieved. So this is my Tally screen. To record my purchase order, first thing that I will need to do is press F11. In inventory features, there is an option order processing, under which I have this option allow purchase order processing. I accept this. When I come back to gateway of Tally, I will see there is another option which is got enabled, which is order vouchers. Now to record the purchase order, I will go to order vouchers. I see the purchase order screen where I specify my supplier's name. So I type XYZ. The supplier's name is shown to me in the list of ledgers pop-up menu which appears on the right hand side. You can see here. When I hit enter, another screen asking me for the certain details about supplier pops up. I can specify all the details related to the party, related to the order, and related to the receipt terms. Then I can specify the order number which my organization wants to specify, or I can select whatever has been specified during Tally by default. During the purchase order, I can define under which purchase ledger it has to be allocated. Now the next option that you see, the next field that this cursor moves into is the name of item. Now I want to place the order for 500 t-shirts. So here I type the name of item as t-shirts. Tally gives us a pop-up of all the stock items which start with an alphabet T. Along with this, it also gives you the list of information about how much material is available with us. So I select t-shirts. Here I can define at what frequency I require this material. Let's say I am ordering for 500 today, but I don't require this 500 material immediately. Let's say I require 250 numbers after 7 days and other 250 numbers after 15 days. So here what I can do is, in my purchase order, I can define the period of delivery. So I say I require this material in 7 days. In the next 7 days I require 250 numbers of my t-shirts. The rate I am agreeing to is 150 rupees per number. The other 500 I require after 15 days. So I specify 15, other 250, the rate and other details are filled up automatically. Now the beauty of Tally is that if you do not wish to specify days, number of days, you can specify the date directly. So let's say today is 1st of April and by 15th of April I require the other 250. So I specify over here 15th April or let's say 1st of May. So I select 1st of May, specify the quantity, the rate as agreed, and I accept this. So my purchase order has been raised. Should we recap this? Okay. So what did we do first to raise the purchase order? First, we enable the purchase order processing from F11 features. We set this option under order processing as yes. When we came back to Gateway of Tally, we found a new option, that is order vouchers. When I hit enter here, a purchase order screen came up where we filled up all this information. We are raising a purchase order on XYZ company. We provided the supplier details, the terms of order, the terms of receipt of material, the order number, to which purchase ledger this is going to be allocated, the name of item that I want to place as an order. We specify the due date, like 250 numbers to be supplied in 7 days from today and the rest 250 to be dispatched on 1st of May. Totally, I am placing an order of 500 numbers of t-shirt, which I am agreeing that I will pay 150 rupees per t-shirt. So my purchase order has been raised. Hi, I am Shailesh and I will be taking you through the purchase process today. What is the next thing that you would do? In a business process, once the purchase order is raised, the supplier would try and fulfill that requirement of yours through a delivery note. Is it compulsion to raise a delivery note? I would say no. The supplier may directly raise an invoice onto the business. However, generally businesses raise delivery notes for a month and finally a purchase invoice is raised against all those receipt notes. I'll repeat that statement. Is it necessary to raise a receipt note or a delivery challan? No, it is not necessary or compulsion to raise a delivery challan. If a business wants, it can raise a purchase invoice or a sale invoice on its customer directly. However, generally it is preferred that first a business sends all the delivery challans to its customer, customer accepts it, sends it back to the supplier, and supplier then punches all those delivery challans with a purchase sale invoice and he sends it again to the customer at the end of the month, saying these are the material which I am going to charge you for, which I had delivered to you, along with the proof of all those delivery challans which are accepted by the customer. However, I being a customer, what I would be recording is a receipt note. This receipt note will be raised against a purchase order that I had raised on the supplier. Now let us see what is the definition of a receipt note. A document used to record the inward entry of any goods received at the premises of the organization. Let's say the person the supplier has sent us the 400 t-shirts and we have received it. So what we would do is we would raise a receipt note in Tally.ERP 9. To record a receipt note, first you will have to ensure that in F11 inventory features, under other features, the option use tracking numbers, which is to record delivery and receipt notes, is set as yes. Once this is set as yes, you can go to Gateway of Tally. From Gateway of Tally, go to Inventory Vouchers. In Inventory Vouchers, you will see a button called Receipt Note. So when you click here, it will take you to a Receipt Note voucher. You will observe that the receipt note looks similar to what your purchase order looked like. Now, I can specify a reference. I can specify the reference as a supplier challan number. Then, I will select the party from whom the goods have been received. So, I select XYZ & Co. Is it against any order? If yes, if there are any purchase orders raised against the party in Tally.ERP 9, in the next screen that is appearing in front of you, you will see the list of all those order numbers. So now I select order number 1. If there are any other references that you want to specify, you can specify it in the order details. Further to this, any supplier details which you have mentioned during the purchase order, all those details will be pulled out over here. The purchase ledger. You can see here, since I have linked this receipt note against the order, the details which were specified during the transaction purchase order are pulled out over here automatically. Now, how much material have I received? How many t-shirts have I received? I have received 400. So, the quantity that is being specified here, 500, may not be correct. So, I would say, okay, I have received for order number 1, 250 numbers which were due in 7 days. And instead of 250, I have received 150 number. So, totally, I have received 400 numbers of t-shirt today. So my receipt note is done. Now to check how much order is pending now from XYZ & Co. What do I do? I will go to display, then statement of inventory. You will see an option purchase order outstanding. So when I hit enter on purchase order outstanding, I will see the list of menus, like whether I want to see purchase order outstanding for stock groups, a particular stock item, an entire group of ledgers, or a specific ledger. So I go to ledgers, hit enter, and I select XYZ & Co. So it shows me that from XYZ & Co. there is t-shirts which is pending of 100 numbers. If you opt to select all orders, it will display all the orders irrespective of any specific item or specific ledger. So when I hit enter, here in this screen it will show you only due orders. As on 1st of April, are there any orders due? I would say no. If you remember clearly, the purchase order that we had passed, we had said that the purchase order will be due after 7 days for 250 numbers, and the other portion will be due on 1st of May. So if I change the period by pressing Alt F2 or click on the period button, allow me to specify the period for which I want to see the outstandings. So I say 2nd of May. When I hit enter, it will show me the purchase order outstanding. So now you can see the details of the purchase order outstanding, which says 1st of April 2012, an order was raised, order number 1, for t-shirts on XYZ and Co. Ordered quantity was 250, balance is 100. And what is the due date? The due date is 1st of May 2012. So assuming this report was opened on 2nd of May, Tally will display that it is 1 day overdue. Now what would you like to do with this outstanding? As a business, you can decide whether you want to get this material dispatched to you immediately depending on the urgency of the order. Just in case the order has to be pushed back, maybe you do not have those many sales orders pending, then in that case you can inform the supplier to delay the dispatch of this material. Why would you do this as a business? When you buy this material or when you receive this material, it will come with an invoice. Now when an invoice is accepted by the business, then the payment has to be made whether these goods are sold or not. So do you want to block your funds by purchasing these materials, or you want to delay this till the time you receive another order? That is a decision that the business can take. I'll come back to gateway of Tally. So what we have seen till now is we have booked a purchase order for t-shirts of 500 numbers, and then we have received material for 400 numbers. Right? Now we move to the next thing. A rejection out. Assuming that from those 400 numbers of t-shirts that I have received, during the quality check I found that certain numbers like 50 t-shirts were damaged. So would I like to keep it with me? Yes, unless I want to incur losses in my business, I will dispatch it back to my supplier. Right? So, since I have not received a purchase invoice and the transactions that are happening is through receipt note, what I will do is, during the quality check, I will reject those 50 material and send it back to my supplier with a rejection out document. That rejection out document will be signed by the supplier and sent back to us. This is required for the record purpose. So when the supplier sends an invoice to me, I will check it against whatever was received and how much was rejected, against that whether the purchase invoice has been made correctly or not. So the definition says rejection out is used to record the goods returned to supplier before making payment. This document affects only the inventory. It does not affect your accounts. So we are discussing the scenario. 50 t-shirts were found defective. Now I will raise a rejection out onto my supplier. To record rejections, first thing that I will have to do is ensure that in F11 under inventory features, the option use rejection inward and outward notes is set to yes. So I make this option yes and I accept it. Then come back to gateway of Tally. Go to inventory vouchers. Here you will see Alt F6 rejection out button. So I go to rejection out, select the ledger XYZ and Co, hit enter, specify the name of the item that I am sending back. So I select t-shirts, it was against the tracking number 12, for which I have received 400 numbers of t-shirt. So I select that. Immediately all the other details like what was the order number against this particular tracking number, the details of the quantity, the rate which was agreed upon, and when is the due date. All the details are captured automatically. Now am I sending 400 numbers to the supplier back? No, I am sending only 50 numbers. So I will change this from 400 to 50 numbers. I accept this and my rejection out is done. So now, how much inventory of how much inventory of t-shirts is available with me? To check that, I go to stock summary and I hit enter. T-shirts, I can see 1970 numbers. Now how is this arrived at? You would like to see what was the opening balance, how much has it been received during this period, how much has been sold or has been made outwards due to consumption, and then what is the closing balance. Today, at present, you are seeing the closing balance of the t-shirts. What you could do in the stock summary screen is press F12, enable these options like show opening balance, show goods inwards, show goods outwards, and closing balance, and accept it. So you can see here from XYZ and Co. I have received 350 numbers. Right? You remember we had placed an order for 500, we had received 400 and we have rejected 50. So from 400 if I deduct 50, the balance which is received is 350. Coming back to the presentation. Till now we have seen purchase order for 500, a receipt note for 400 and a rejection out for 50. Right? Thank you and do join me in the next session. Hi, I am Shailesh and I will be taking you through the purchase process today. Now let us see how a purchase will be recorded. First of all, a purchase is a source document used for recording any purchase transaction. So now that I have received 350 t-shirts, I will need to book a purchase invoice once the supplier sends me the sale invoice. So how do I record this transaction of 350 t-shirts purchased? In my Tally.ERP 9, I will go into accounting vouchers, click on F9 purchase, and a purchase invoice will be shown in front of me. Now the purchase voucher number for my organization is number 2, but the bill which the supplier is going to send me will have its own number. So what I can do is, once I receive the invoice, I can look at the invoice and find out what is the invoice number and punch in that number here. The date. The date of the supplier invoice may vary from the date of transaction. That is because sometimes you may receive goods which are interstate, which are transferred interstate. So there is quite a possibility that the goods which are being transferred from one state may reach to me on a different date. Correct? I may be recording the transaction on 1st of April, but the goods may have been dispatched on 31st of March. So in that case, the invoice will be on 31st of March. Then I select the party from whom the purchase invoice has been received. It will show me against which receipt notes. So when the supplier sends me the invoice, he will also mention the name or the references of the delivery challans that he had sent to me. Looking at those delivery challan numbers on the purchase invoice which has been sent by the supplier, I will select those references here. Once I select the receipt note reference, the order number and other details fill up automatically. The purchase ledger is also selected by default. Now you can see over here that once I have tracked it against a particular receipt note, you will find the details of how many t-shirts have been sent to me through that receipt note. Do you remember? We had raised the receipt note of 400 numbers. But then, because we found that certain t-shirts were damaged, we have sent it back to rejection out. So those are also considered in that tracking. Now what you can see here is the t-shirts are being billed for 350 numbers. Now how does this help? Once the supplier sends me the invoice, if he has sent me the invoice for 400 numbers, I can dispute with him saying that you had sent me 400 but I had rejected 50 and I had sent back to you. Correct? Now you will be able to find out whether there is any discrepancy in the invoice which has been sent and whatever you are recording. So all the details are filled up. I just have to accept this transaction. And it's done. Okay? So I'll move back to my presentation. There is another way of recording this purchase transaction. Let's take the scenario that the supplier may be charging me certain expenditures in the invoices, like the freight charges. And if it is going to be appearing on invoices regularly, then in that case, I may want to automate those kind of expenses in my transactions. Why automation? This will save me time, and it will also reduce the errors that I will make during any manual transaction. I'll repeat that again. Why I would like to automate certain transactions is because these expenditures happen regularly in those type of transactions. And if it is happening regularly, then if it is automated, it will save me a lot of time and it will reduce errors that I may make when I am making any manual transaction. This automation of any voucher or transaction is called voucher class in Tally. We will use the voucher classes to automate expenses or any taxes which we want to use regularly in my transaction. So we are taking a scenario that XYZ Creations is going to charge freight expenditure of 10% regularly on the transaction value. So if I want to automate this in my purchase, how do I do it? So in Tally.ERP 9, from Gateway of Tally, go to Accounts Info, Voucher Types, Alter. Now which voucher type do we want to automate? Yes, it is the purchase. So I select purchase, hit enter. It gives you the voucher type alteration screen where on the right hand side you see name of class. So you come to name of class and specify any name which you could remember when you are passing the transaction. So let's say freight or with freight. I hit enter. Now it will ask me what are the types of groups that I want to exclude while making this transaction. So when you are making the transaction, when you go to the party account name, it will exclude certain groups. If you want to include certain type of groups, like generally a purchase invoice is raised against any supplier. So you wouldn't like to have a list of daters in your list, right? So in that case, you can say include only sundry creditors. So when you are making the purchase transaction, you will get the list of only sundry creditors in your bills. Ledger. To which purchase ledger does all this item allocation go to? So I select purchase. Is there any ledger that I want to allocate this? I want to add or automate over here. Since freight is an additional expenditure which I want to automate in my purchase transaction, I would select freight. What is it going to be charged on? It is going to be charged on the total value of the transaction. What is the value? It is going to be 10% of the total transaction. Do you want to round it off? There are three methods of rounding given here. One is upward rounding, the second is downward rounding, and the third is normal rounding. Upward rounding will always ensure that your amount that is coming in decimals is rounded off upwards. So let's say you have an amount of 10 rupees 30 paise, the rounded off value will go to 11 rupees. When you select the rounding method as downward rounding, it will always round off the decimal to a downward value. So let's say, again taking an example, 10 rupees 30 paise, when you select downward rounding, the value will go down to 10 rupees. Normal rounding, usually whatever is applied in your mathematical calculations, the same rounding will be applied here. So let's say if the amount comes to 10 rupees 30 paise, then the rounding will go to 10 rupees. If the value is 10 rupees 50 paise, then the rounding will happen as 11 rupees. I will not apply any rounding method here. Remove 0. If there is any value which rounds off to 0, let's say the amount was 0 rupees and 10 paise, right? So if I have applied rounding method, then it will not consider it 10 paise. The value will come to 0. And if the value is 0, then this line of freight should be removed from the invoice. I accept this. Now let us see what is the status in the purchase invoice. I go to accounting voucher. I click on F9 purchase, and immediately I see voucher type purchase and class name with freight. So if I want to continue punching in the regular purchase, I will select not applicable and continue to pass my normal purchase invoice. However, if I want my purchase invoice to be with freight, then I select the voucher class with freight, and when I now hit enter, you'll find certain change in the purchase invoice. You will immediately see freight 10% displayed over here. Now let us see what is the impact of this. So I select XYZ. So 100 numbers of t-shirt has been received, has been invoiced. The value is coming to 15,000 rupees, but there is an additional expenditure of 1500 rupees that I need to bear, because the freight of 10% is being charged on the total value of the invoice. So you can see the freight value 10% is getting calculated automatically and is being invoiced to me. So this definitely will reduce the time consumed in making the purchase invoice, and this will also ensure that there are less errors or no errors in the purchase transaction. I'll quickly recap this, how the voucher class has been created. To create a voucher class, I will go into accounts info, voucher type, alter, and select the voucher for which I wish to create a voucher class. So I select purchase. Now in the purchase or any type of voucher type, you will get the name of class option on the right hand side. So here you can define any name. We have defined with freight. When I hit enter, it takes me to the voucher class definition screen, where I will specify to whether I want to exclude any groups from appearing in the party name. If there is any specific group which I want to include when it appears in the purchase invoice, the default purchase ledger which I want to use when I am making the purchase transaction, and if there are additional expenditures which I want to automate in my purchase transaction, I will specify it here. So what we had done, we had specified the ledger name freight as an additional expenditure which I want to include in the purchase. The calculation type was, it is always going to be on the total value of the transaction. So I selected total sales. The value basis 10%. I know that on every invoice there is a freight which is charged at 10%. Then I specify this value 10%. Rounding method, as I explained, will round off the values as per the expectation set over here. And remove F0. If the rounded off value comes as 0 on the invoice, then the entire line of freight will be removed from the purchase invoice. So we accepted this, and when we came back to Gateway of Tally, we went to accounting invoice or accounting vouchers. When you click on purchase, it will show you voucher type purchase and display the class name as with freight. So in case I want to raise a purchase invoice with freight, I will select this class. If I want to pass a normal purchase invoice which is without freight, I will select not applicable and continue to pass my purchase transaction. Thank you, and do join me in the next session. Hi, I am Shailesh, and I will be taking you through the purchase process today. Debit note. Debit note is raised when the goods are returned after the purchaser has accepted the invoice. The definition says, raised after goods are returned by the purchaser claiming for refund in cash. That means I have accepted those goods, the invoice has been raised, and then suddenly there is a customer who has come back with those goods which I had sold to him, saying that they are damaged or there is some kind of defect in it, which was not noticed during the quality check. So I accept that material back and I send it back to the customer and ask for a refund. Now, asking for a refund, you will need to raise a debit note. So the scenario that is being discussed over here is that ABC company's storekeeper discovers 10 t-shirts are damaged. Now these 10 numbers have to be sent back. So how do you do it? From Gateway of Tally, go to accounting vouchers, go to debit note, specify the party name as XYZ and Co. Select purchase ledger, go to name of item t-shirts, ten numbers are being sent back. So I select this and I accept the transaction. With this, you may also add in the additional expenditures that you had borne. So let's say freight charges you had borne, which you want to get a refund on. So select that freight, specify the rate and accept it. So debit note for 10 numbers of t-shirts which are getting sent back to the supplier is being raised. A debit note could also be raised in case you find that there is a discrepancy in the rates which was specified during the order and the purchase invoice. There are possibilities that the supplier may have overlooked the price which was specified during purchase order, and he may have charged a regular price to us. So what we would like to do is generally raise a debit note for that purchase invoice which has been accepted and claim the refund for the money which we have paid extra. Now, how do we record the payments? Or what is a payment rather? It is the payments which we make to the supplier against the purchases that we have made till now or which we have made in the past. Now let's say there is ABC and Company which is yet to pay for its previous purchases made from XYZ Creations. So how do you record that purchase, the payment transaction? To record payment transaction, you press F5 for payment, select XYZ and Co. Specify an amount that you are going to pay to him. Let's say 16,350. Immediately a bill-wise details screen will appear in front of you. When you select against reference, immediately it will display the list of bills that you need to make payment towards. So select this bill number and accept this transaction. Now how are you going to make this payment? Either you are going to make it through cash or through check. Assuming that you want to make it through a check, then you will need to record it against the bank through which the payment is being made. However, we find that the bank ledger is not available here. Maybe while creating the accounting masters, we may have missed out. So what the intelligence of Tally allows you to create a new transaction create a new master on the fly. Now you do not have the ledger here. So what do? From this screen of payment transaction itself, you can press Alt C. I repeat, Alt C, which will take you into ledger creation screen. Now specify the bank under which you have a bank account through which a payment or check will be issued. Classify it under bank accounts. Accept it and it's done. You can see HDFC Bank appearing over here in your payment transaction. Now accept this transaction and the payment towards that supplier is recorded. Alright, now let us see what are the different types of bill-wise details that appear when we make the purchase transactions. We will also go through the pre-closure of orders. There are different methods of payments or adjusting payments against invoices. You can see there are 4 listed out in the presentation. The first is against reference. Against reference is usually used when there is an invoice against which you want to make a payment. So when you select against reference, it will list out all the references of bills which are yet to be paid. Then there is advance. Advance method of payment is used when we are making or receiving advance payments. These advance payments then will be recorded against any invoice. There is a possibility. Even in a day-to-day life, when you are going to a grocery shop and you want certain goods to be delivered, certain consumables to be delivered to your doorstep, the supplier would say, okay, you make the payment first and then I will send you the goods in the bill. Similarly, when a supplier is dealing with a new customer, usually he will ask for certain advance. So in such a scenario, when I am paying to the supplier in an advance mode, I will select the reference as advance. New reference is generally selected when we are raising a new invoice. Either it is a purchase invoice or a sale invoice, against which on a later date the payment will be made. On account is generally used when we are making payment or receipt. This will be used when making a payment or a receipt transaction for which we do not know against which reference we want to raise this payment or receipt. Okay, now we have seen what are the different types of methods of adjustment, and we have understood that. So now let us move to the pre-closure of orders. Now why would an organization want to pre-close an order? There are times when the organization feels that, okay, whatever material that I have ordered and whatever I have received is sufficient for my consumption to satisfy my sales orders. In such a case, I would inform the supplier about it and pre-close the order, saying that whatever material you have sent to me is sufficient. I don't require more. So in such a case, you will require a pre-closure of order. Now let us see how Tally handles it. There is a scenario, ABC and company requires only 300 t-shirts instead of 400. So I can pre-close this order. To pre-close the order, we will first go to display, statement of inventory, purchase order outstandings, now I have 150 numbers of t-shirts still pending to be received. I can select this and click on pre-close. As soon as I click on pre-close, the purchase order outstanding screen gives me one more column where it specifies, give me the specific pre-close quantity. So if I am closing the entire balance quantity right now, I can specify that same thing. So the net balance left now is 0. It will also ask me for the reason for pre-close. This reason for pre-close will be helpful when I am doing certain types of analysis about the supplier. Sometimes it does happen that because the quality of goods that the supplier is sending to me is not of top quality. Sometimes the reasons are from my side. Maybe I have over-ordered and I need to take care of that in the future. So specifying a reason for the pre-close is important. It is being closed on today and I accept it. So now when I look at the orders due, I will find that there is no orders pending. So let us recap what have we done today. We have covered the entire purchase process starting from purchase order to the payment. We have seen how a voucher class is created in a voucher type. Then we have seen how bill-wise details are maintained. We have discussed about new references, against references, advances and on account. And we have seen how an order can be pre-closed. Thank you and do join me in the next session.